Good morning, everyone. Morning audio grain notes here as of this recording near 6:30 in the morning. We have July corn up 3 at 6.99 and 3/4. July beans up 12 and a half at 15.50 and a half. Yesterday, another surge of buying. The volume would suggest that funds were involved. Open interest basically unchanged. So we're going to call this one 50-50 yesterday, whether the funds were here or not. That was a Tuesday trade, so if it was funds, it will show up on Friday's commitment of traders report. So we'll have to wait for that report to know for sure if that was fund involvement in the market. We did see buying slow down in corn once the July corn did make it above $7. Tough to tell if that's resistance yet. It could have just been the time of the day that we reached $7. That buyers simply slowed down as they would have any day. So we'll see. Today we get the ethanol report. Ethanol itself, the price of ethanol has been quite strong, rallying right with corn. So that's why we can again expect at least a moderate ethanol report, and even a moderate ethanol report with July corn near $7. That's solid news right there. That is the main reason why we've been supported here recently. Weather maps, they have rains. There'll be plenty of areas out west that'll get planting done. They do have a solid stretch of rain through the heart of the Midwest. Temperatures remain cool for the next 10 days. We would say that trade will eventually pay attention to cool, wet weather for slow growing, but until corn planting reaches 70%, the focus is likely to stay on planting if we're looking at the fundamental weather side for now. Over in cattle, we saw a 119 trade earlier in the day and then a 118 after the close. We'll have to see how today pans out. Seeing any trades on a Tuesday is a little bit rare. It's tough to know whether that 119 turned into a 118 because futures were hit as hard as they were, or just if the 119s were thin and the 118s are where we're going to trade. Again, that was Tuesday trades, likely light volume, so we'll have to see what we get here today. But again, last week's average was 119. So if we come away with a 12,000 higher show list and still are able to see a 119 cash trade, that would actually be solid news as well. The most important thing we want to point out in cattle here this morning is that we still feel 119 is your fundamental June futures price. On the rally in early April, this futures market went to $6.62 overbought. Yesterday's low was $6.47.5 oversold. So basically what that's telling us so far is that as far as they went overbought, yesterday's low matched that almost right on for being oversold. So we'll see here if that slows down some of the selling in this market. We'll keep an eye on that, of course. We'll track funds and stuff like that. We always do, but we'll also want to track funds for the fact that if they finish liquidating to what would be considered flat, we could make a case there's another $2-3 lower in the futures here short term. Still don't know if we should expect that yet, but just put that up as a caution flag. But so far, again, this cattle market has not gone oversold more than it was overbought in early April. Let's see what we get here for an ethanol report. See if that same size buying comes in today that was not seen on Monday. And as always, we'll see what we get through the trading day.